2024 edition of the Urban League Jobs Network Digital Career Success Series, brought to you by the National Urban League. I'm your host, Kenneth L. Johnson, president of the Harlem, New York-based diversity recruitment firm East Coast Executives. If this is your first time joining us, welcome. The Digital Career Success Series, DCSS as we call it, DCSS as we call it, it's a professional development series that helps members of our Urban League Young Professional chapters and other diverse job seekers develop new skill sets that will enhance their careers through digital platforms such as webinars, Facebook, and Instagram Live. The goal is to provide an opportunity for professional development right from one's computer. If you want more, visit us at nuljobsnetwork.com. Extremely excited for today's DCSS, Making Money Moves. Come on, a title like that, anyone gets excited about making money moves. We will feature Mr. Byron Logan and Miss Dana Wilson today. Woo, this is going to be a good one. I'm excited, really excited to have everybody here. Let's go with introductions right now. Let's get that started. So Byron, welcome to the Urban League Jobs Network Digital Career Success Series, my friend.
Yes, Kenneth, thank you for having me. Everyone in the audience, we're going to have a great conversation today. I'm excited.
Well, I'm not going to let you off the hook that easy. You got to tell us a little bit about yourself.
Oh, sure. So over the last 3 years, I've been here at M&T Bank. I am a business banker in the New York City Metro office. And my job literally is to work with small to mid-sized companies on helping them acquire working capital. And that's working capital needed either to expand the business that they're in or to start up a new business. So been plenty busy doing that.
It's great having you on today. I think you bring a wealth of knowledge on the business banking side and the personal banking side, but we got some support today. We got Dana Wilson. Dana, founder of CHIP. Please let the Digital Career Success Series audience know a little bit about Dana Wilson and the work that you're doing out here.
Absolutely. And thanks for having me. I feel like we were supposed to have some theme music when you started saying making money moves, Ken. I was like, there should be some.
There really should be.
We have to, I think we have to sidebar that conversation and get some music on here. But hello, everyone. Super excited to be here with you all today. My name is Dana Wilson. I am the CEO and founder of CHIP. As it says on the screen, it stands for Changing How Individuals Prosper. And what we do is we make it easier for retail users to find financial professionals of color and really focus on increasing the visibility of Black and Brown financial professionals in the financial industry. So it's a marketplace. I've spent over 15 years in financial services, really have worked everywhere between banking, insurance, wealth management, and now found my way over to the financial technology side, which has been an amazing and humbling experience to be a startup founder. So for anyone on that journey on this call, definitely sending you a lot of love and support and light on that path, but happy to be here.
You know, people always talk about servant leadership. And when I realized that you two were going to be our guests for today, Byron has been just a real great advocate for things that are good and supporting others in their journey to get into financial services. It's a personal thing for me. He's reached his hand out even to help my son. So I'm really excited to have Byron on the thing, someone that loves to help people. But Dana, I know you set up CHIP on a mission, right? And just, can you touch base with that a little? Can you talk about that just a little?
Yeah, sure. I mean, as I stated earlier, I've spent over 15 years in this field in the financial services industry. And when I came in, there weren't a lot of people that looked like me. I think we're still trying to make great strides within the industry to increase the visibility of Black and Brown professionals. But that was really it. I wanted to ensure that financial professionals of color, specifically Black professionals, felt seen, felt heard, felt important when it came to building their businesses and what that unique experience can be when you don't see that representation within the industry reflected in a lot of ways. And that was a lot of my experience early on in my career. And I knew that my story was one of many, unfortunately, those who have come in the industry before me and those who are still coming in after me, but I don't want their path to be the same that I have. And that's, always why we're continuously pushing the limits to ensure that visibility. But that's the reason why CHIP was started, to enhance that, right? And not just for professionals, but also retail consumers on the opposite side of that. A lot of us as Black and brown wealth creators and generators for our family don't always feel welcome and feel seen and heard when it comes to our money. So ensuring we have that safe space to be ourselves and show up financially authentic was extremely important for me.
And we appreciate both of you waving the flag to support Black and brown professionals. I know Byron always shares with me that the CEO of M&T Bank is indeed a Black man. So I just always just appreciate you guys keeping on pace and supporting individuals that definitely need support. And that's what we're here today. Listen, our Digital Career Success Series audience, amazing audience, please tap in with us. Put your questions in the Q&A, have some conversations in the chat. Let us know where you're from. Let us know that you're here. We really would appreciate it. We are going to get started, and that's kind of where we start. It's about starting early. So Dana, I guess, starting early is key in wealth management.
Yeah, it really is key. I mean, the sooner you start, and really that's in all forms, right? I think, when I came in, there weren't a lot of things. The whole financial technology space, wealth tech, was there, but it wasn't as prominent or as present as it is now. And I feel like it's a great time to start with something, whether it's $25. There's a lot of applications where you can start with that, right? We understand that the earlier you start, the more money you'll have in the next couple years. So whether you're just starting out in your career and you're trying to figure out, okay, I'm filling out my 401k and all of that stuff, I got that done, but what else could I do? Now's the time to kind of really be able to say, hey, there's different applications. For example, one of our partners, Stackwell, and I always like to shout them out because I think they're doing great work as a team, but they have a robo advisory platform where you can start with a very low amount and then continue to invest that over time, right? So it's also about just getting in there, starting early, bringing that into how you're budgeting. Maybe you're investing $100 a month or more than that, depending on what your income is or your discretionary income. And you're able to just put that aside in what's called dollar cost averaging, which is just a method of you putting the same amount consistently over time in. And the more you do that, the more you'll have, when you go to get to retirement, or what I more so like to call financial shifts, because I feel like none of us are really retiring nowadays. It's more so, how do I set myself up so that I can comfortably do that next thing I want to do, that next joy that I want to do, and I can set myself to get there financially.
Hey Byron, let's talk a little bit about this. So Dana's talking about retirement, but I know you're heavy on the business banking side, and oftentimes people are working with the goal of entrepreneurship or solopreneurship, right? And compound interest is a thing, and people are kind of putting money aside to support ventures that they want to pursue later on in life. Tell me about that start early process.
Oh man, that is so important. So, the key to generational wealth can include a business. But I think first and foremost, those in business or those looking to start a business should have a great relationship or start a relationship with a business banker. And remember, everybody, listening in and watching, that conversation is free. No matter what bank you bank with, M&T Bank, Citibank, any other bank, wherever you're at. You can walk inside, you can ask to speak to the business banker, you can make an appointment to do so, you can do it virtually, but sit down with that individual, let he or she know what your business plans are, whether you have an existing business that you want to grow and expand, or if you're looking to start a business because you have a great business plan. And then to touch on that, having that business plan is definitely the key. It's going to tell the bank that you're serious about your business. It's going to explain to them the products, the services that you're going to be offering. It's going to talk about your competition if there's any. And most importantly, it's going to talk about how you, the business owner, is going to get paid and how the bank will get paid back.
Well,
Yeah,
we're gonna deep dive on that later on in the conversation. I definitely want to speak about that though, Dana. Right? So every plan kind of needs a safety net, right? So I see here that the second bullet after start early is emergency fund. You want to touch base on that a little?
Yeah, sure. And I couldn't agree more with Byron, right? I mean, I'm a startup founder myself. So it's like you have to budget and plan in a different way and ensure that you're working with people that can help you not only start that plan, but also continue the execution of it because it's all based around strategy. And like I was saying earlier about that, retirement plan or that financial shift that you might have next, it's all about that, right? And I think if we're talking about emergency fund and strategy planning, obviously we just went through COVID and it's still somewhat kind of crawling out of that space. Some of us faster than others, but that was a great, unfortunate insight that let us know that, hey, that nothing is safe, right? We have no idea and we cannot control what happens in the world and the universe. In all different ways, but what we can control is how we're spending, how we're budgeting, and what we're putting to the side. So just in case, something does happen, and hopefully never again as catastrophic as COVID, but it was a lesson learned in the sense that we have to be more prepared. We have to understand, what work life looks like, what that balance look like. Are there things that we can kind of get rid of that we're spending on? What do we need to double down on? I know some people, hey, it's hard for me to put 6 to 9 months away. If you can start yourself on the path of maybe 2 months, 3 months, and continue to build from there, right? If 6 to 9 feels hard and impossible in this moment, a lot of us maybe transferred or transitioned out of our full-time career, doing more gig work, and the budget and the strategy just looks different, right? You're getting paid differently. Some of you might be trying to kind of figure out, how do I strategize within what the new income is that I have now, but really getting to a point where you are saving, you are putting some money away, and you can start that saving process and that investment process all at the same time. But to the next point that's here, right? It's having that budget. And I know sometimes that word, can scare people. Budget doesn't sound fun. It sounds stringent. But I think, if we kind of take more control over that word, and over emergency funds, we kind of put ourselves back in that space of power to, to have more power over our money. So our money isn't necessarily overpowering us. So knowing all the money that's coming in, knowing our numbers, knowing how we're strategizing and utilizing that, and then being able to put that money away, whether it's $50 a month, $100 a month, into account that we are not touching, again, that we are not touching, right? And leaving that there, and then utilizing that if something happens in the future.
Start early, emergency fund, budgeting. We're going to go to the next slide, but I hate to jump off script here. But Byron, I have to bring you in on this because Dana mentioned the gig economy and individuals that are kind of working in that space. From just a general banking standpoint, any advice for people that are working kind of in that space and how they need to create a relationship with their financial institution?
Oh, most certainly. Whether you're working, for a corporation, whether it's a gig position, you should always have a place to put your money so it can grow exponentially. As Kenneth mentioned, though I'm a business banker, a lot of my banking partners work on the retail side of banking. So I have a branch partner, I have a mortgage partner. So think about it this way. No matter where you're working, who you're working for, when you start putting that type of money away, ask yourself, are you saving for something? What are you saving for? I like to buy a home. So just like you can sit down and speak to a business banker about business, you can speak to a mortgage banker about mortgages. And we're talking about co-ops, condos. We're talking about investment real estate. We're talking about if you want to do something with Airbnb. These are all viable business models in which a bank will either loan you money against or can help you set up a savings for. And I'll give you an example. We have a very interesting business money market account, and it's paying a very competitive rate. And I even question, why do we have a business savings account when most businesses might keep their money with a wealth management strategist, with financial advisor, not so much on the retail side. But the product was created for the gig worker, to put a little bit away at a time, but also to get the return on that investment. So at the end of whatever that time period is for you, you can reach your financial goal even faster.
Wow, excellent information. Live below your means is a bullet that we have here. So Dana, people are working in the gig economy, or people are just making more money. Maybe they've received a promotion or a raise or something of that nature. Uh, it's lifestyle, avoiding lifestyle inflation. Talk to us about
Right.
that conversation.
This is where you're supposed to insert like more money, more problems. Come on, Kenneth. What's going on?
Okay,
I need the
hold on.
music to align with the
Listen,
slides.
is this what we're gonna do a music theme? Because Byron is from the Bronx. He's from the home of hip hop. I'm sure he can come in here as well. So
Okay, here we go. People are like, we didn't
music
come
theme
in
the
here for
conversation. More
the
money,
music
more problems.
lesson. But no, it kind of goes back to that, right? Just because you're making more doesn't necessarily mean you have to spend more, right? You want to still live, not necessarily below your means, but within your means. And of course, really what that means is that, hey, if you get that increase, you get that bump up in salary. We also forget the other things, right? That bump up might have put us in a new tax bracket, right? So you didn't necessarily get that large increase that you have, as your gross on paper, it looks a lot larger, but that take home is going to be a lot smaller than, right? Because that increase could have, again, pushed you into a new tax bracket. So although, now you want to get that, larger apartment, or you want to take that time to buy that home or put that down payment down, I'm not saying don't do it. Just make sure that you have the means in which you can afford it. Because although we want certain things, it doesn't necessarily mean that we can afford the whole thing, right? You want the new car, but can you afford to keep up with the insurance, the maintenance, all the other things that come with it? Because although you buy it, now you put yourself in a greater hole, and even that gap that you just made is now beyond, right? Like now you're spending beyond that gap, and you consistently have created this wheel of just debt, right? And then we kind of get into all these other things that are right below, which is another hole of debt that you might be in or might have created. So it's really about, okay, I know I have this money coming in. I know I'm going to get this bump up. Okay, are there things I need to pay down? Can I start to use this to fuel my emergency fund, or put this money into different savings or investment vehicles that are going to generate more money? Or if I have all of those things good to go, is this a place where I can start making different types of investments in myself? I think what Byron just said is important, because I think the one thing that we forget, especially as startup founders, or if you're on the gig economy side and you've left that corporate, umbrella of all the 1-800 numbers and great health insurance and bells and whistles, is that you don't necessarily have all that going on anymore, right? You don't have that company match going into your 401k. You may not have that quick ability to have all of that going into any outside investments that you have. So you have to remember to create that yourself. So if you're able to, live within your means, budget well, you could at some point live above your means and afford to, right? So there's that different mentality that we sometimes have to switch. It's a bit of a mindset thing that goes along with it as well.
Mindset indeed. And you have to have a mindset as you kind of find places to place your money. Am I right, Byron? Is that kind of about an open mindset when we talk about diversifying investments?
Definitely. Please do look to diversify any and all your investments. Again, if you go to a bank, you have the retail side. So that's your daily basic checking and savings. If you want to speak to what we call a certified financial advisor, the banks of that. And then that's more of your stock and bond treasury note investment. To take it a step further, some banks, my bank included M&T Bank, we have what we call an investment suite product. And I normally use this or recommend this for my nonprofit clients. So these nonprofits, they survive off fundraising. But to go back to what Dana said, during COVID, the fundraising kind of was shut down unless you had virtual means to do so. So ask yourself, how are churches collecting tithes? How are animal charity or people charities collecting dollars? Most of them weren't. So that revenue stream stopped. So with an investment suite product that I'm talking about, service that I'm talking about, it allows nonprofits to put money away, and it earns a very competitive rate of interest. But what happens is, night overnight, it's swept into an overseas investment managed by the bank itself. But couple of things: the money is strictly liquid, so the not-for-profit can always access it if they need it. And two, it's FDIC insured up to 175 million. Now, some of you may say, how is that? Well, on a regular retail account, the FDIC insures your money up to $250,000. On this investment sweep account for non-for-profits and businesses, we take your money, and I'll just use a prime example, to $500,000. We'll keep 250 at M&T. We'll put it 250 in another participating bank in the investment suite. So your money is split at that 250 covered by the FDIC over the amount of banks or the amount of money that you have. So it's a beautiful thing. It's a win-win-win. FDIC covered up to that high amount, strict liquidity, you always have access to it. But the exponential growth that I've seen, Kenneth and Dana, I have a not-for-profit customer that has put about $5 million in this investment suite, and every month they clear about $20,000 in interest.
Nice.
Now think about how many programs, how many meals, how many after-school programs that type money can help support.
Wow.
Wow.
Definitely appreciate it. We're going to jump to the next slide. It's the Urban League Jobs Network Digital Career Success Series. You can watch this and all episodes on our YouTube channel. Just go to UL Jobs Network on YouTube, where you will find this episode probably in about a week or so, but all the other past episodes as well. All right, we are going to jump into the retirement planning conversation. You're working your business, but you understand that there is an end game. You have something in mind later on down the road, and that involves retirement planning. Dana, would you just kind of touch base with us? And if you don't mind, can you take a deep dive on what these products are? I see them here, and oftentimes we just assume people know what they are, but if you can just kind of give a brief overview on what some of these products are as well, I'd appreciate it.
Yeah, sure. And yeah, so normally when you're working at your corporate companies, typically you'll have a 401k. The 401k is your retirement plan at work. So when you came in to work, you probably filled out a bunch of paperwork and you were checking boxes. And if you haven't looked at it in quite some time, I would suggest that you go over it just to make sure that the boxes that you check actually still align with where you are in life, especially post-COVID. And where you feel like you're going in, your future. Because a lot of times when we come in, we check it and forget it, and it may not align from an investment perspective. So make sure you're always going in and reviewing that, either with someone who's appointed with the company or finding someone externally to help you really understand how you're invested. And typically 401ks are invested within mutual funds within the stock market, which are a pool of different types of investments. So you're not just invested in maybe one particular company, but again, you're diversified within that portfolio fund. So those typically would make up your 401ks. And depending on where you work, a lot of different companies have access to different types of investments. So definitely check into that. But your 401k is what you have on at work. Your IRA, there's a traditional and there's a Roth. The difference between the two is that traditional is pre-tax, Roth is post-tax. So when you're, depending on your income level, you can invest in a Roth or a traditional IRA. Again, maybe check a lot of that with your CPA, your tax accountant, or your financial advisor to see what makes sense for you. Some may make sense to some may not make sense for some of you in here. But your Roth is the account that you're going to invest in with the money that has already been taxed and is coming to your bank account. And that money you can put into your Roth account. And typically the limits on a check, but usually it's around 5,500, might be a little bit more. And then depending on your age, you get to invest an extra 1,000 into that if you're 55 or older. But definitely check and see kind of what makes sense for you, if those investments align, and if you're able to even invest, again, based on your income levels. So it's important that you do participate in something, or be able to take advantage of other investment vehicles. You want to make sure if your company does max or match your investments, that you're maxing that out. And then on top of that, finding other investment vehicles and opportunities where you can put your money so that you're planning for, either your retirement, which again might just be a financial shift into you maybe opening up your business, right? Maybe that's the next thing that you want to plan for within the landscape of your life goals, right? What's that next thing? Is that 2 to 3 years, 3 to 5, 10 plus? But really thinking about that now, as opposed to getting to that point of, okay, now I'm ready to start my business. And then it's just like, well, how do I do that? Where do I take the money from? And how have I planned?
Listen, so the next bullet is insurance coverage. And I know people often kind of separate that from their financial wellness plan, right? So do you guys have any advice on kind of leveraging insurance coverage and/or insurance in general, and how this kind of relates to the whole conversation? Either one can take it. Byron, you
Yeah,
interested in jumping in?
I'll start it off from a business banking standpoint. When somebody comes into the bank and they're looking for a credit facility, whether it's a term loan, a line of credit, and things of that nature, we look at stuff like insurance coverage, especially life insurance. We look at, is it a cash value policy? What's the amount? Because we'll use that as collateral to help you get the business lending that you need. So life insurance, very important, for your next generation, people who you love and your loved ones. Also from a business banking standpoint, very important because that's part of your personal portfolio.
Yeah, and just to piggyback from an individual perspective, everyone wants to get to the point where you can self-insure, right? That's a great place to be. But not everyone might get there. So it's really just depending on what insurance makes sense for you, right? Is it term? Is it permanent? Permanent is going to be a bit more expensive because there is a bit of cash value tied to those permanent policies. Term, you're going to have for a certain period of time. But again, with any life insurance, you want to make sure that you get it early, or the earlier you get it, because it gets more expensive as you get older, as you might possibly have other health issues that comes up. It could be the point of getting it or not being able to get it. And of course, as we're having this conversation, especially within a lot of the Black and brown communities, this is the one thing that we consistently see GoFundMe accounts for, right? Someone didn't have life insurance, and now everyone in that family tends to be in financial jeopardy trying to pay for that homegoing service for that loved one. And it's one thing to grieve about the loss of someone, but it's another thing to also add financial stress on top of that, which can take a toll on anyone who's trying to manage that, right? So it's a conversation that we definitely need to have more of, not a comfortable conversation, but it also doesn't have to be centered around the aspect of death, right? I feel like that is the unfortunate place that it's come about in a lot of our communities, right? It's, oh my God, if I buy this, I'm going to die. If I put this on someone, they're going to pass away, right? And we have to really change our mentality around how we look at a lot of these spaces and vehicles, because these are things that can keep us out of financial crisis, right? Insurance being one of them can have more of a positive impact on our life, on the generational wealth that we're able to leave, because when this person died, I didn't have to pull out money from my 401k, right? I didn't have to go into the savings that I just spent 9 months to a year or whatever pulling together to now have to pay to bury this person and then have to grieve on top of that, right? So there's a lot of things that can happen that we can plan for, and insurance can be one of those. And it doesn't have to come from that place of pain for a lot of us in certain communities. It can be something that can be helpful. I've also heard people talk about it being more of a love letter to their loved ones, right? Here is this gift I left for you so that you don't have to worry, right? And that can be a conversation that you have within your family, because it's not an easy one. It's not a fun one, but it's also the way that you start to change the language to set up your family, your friends, whoever, even yourself, to get to that point where, you had it for a certain time and now maybe you are self-insured. So you don't necessarily need it, right? But you don't want to get to the point where you need it and don't have it. So when it comes to protecting yourself, your loved ones, can sit down with someone and see what makes sense for you and your family, but don't look over this important conversation.
Yeah, I think, protecting yourself and your loved ones, it often involves continuous learning. And as we kind of state here, if you're investing in yourself through education and skill development, you enhance your own earning potential, and you can impact the financial future, not only of yourself, but your family. So extremely important stuff. Thank you for sharing, Dana. We're going to go to the next slide. We're going to push through some of this because I know we have a ton of slides ahead of us. We want to get through this and then jump into Q&A. Hey, if you're still on, please drop your questions in the Q&A for Dana and Byron. We will get to them soon, probably at around, 12:45. Stay informed. Keep yourself updated on financial news and trends. Hey, Byron, where do people go to get this information? It seems like there's so many places where individuals can gather information on personal finance, business finance, but is there a place that you recommend people tap into to continuously receive information of value?
Oh boy. Some of my go-tos are the business journals. And what's nice about the business journals, they have them for each city or each market in the United States. So it doesn't matter where you're located. It's a monthly subscription, but it is worth it. Here, on the business banking side, the Wall Street Journal or wallstreetjournal.com is a great resource as well. Forbes.com is another great resource. And, I'm an on-the-go guy. I like to read my materials on my phone. But if you can pick up a print edition, that's perfect. But again, wallstreetjournal.com, forbes.com, and the business journal for your city will keep you up to date and informed on the latest.
I'm going to tap in, and I know we have people from a lot of the Urban League affiliates across the country here. Several of the urban leagues have programming for financial literacy, financial wellness, housing. I know I've seen some of the locals do really great work, New York Urban League, Philly Urban League, and across the board at all the affiliates. I'm sure you can kind of tap in and get information and resources. So please do not hesitate to tap in there. ULEC, yes, of course. So with that being said, Dana, it's about setting financial goals, right? Short term, medium, long term. Let's talk about goals.
Yeah, goal setting is important for every aspect of your life, through, personal, professional, and financial, right? They all kind of go hand in hand. And if you don't have that set, then you're not really going to be able to see where you're going and how far you've come from a financial aspect, right? So it's about taking the time to sit down and really just have those heart-to-heart conversations, right? Where are you now financially? Where do you want your life to look like in the next 3 to 6 months, or the next 2 months, or the next month, right? It doesn't always have to be this large jump into next year. It can be like, what do I want my life to look like financially next month? Does that mean, paying off this credit card bill that has been like on my shoulders, right? If it's something that you can immediately pay off with maybe some funds you have coming in, I know tax refunds are around the corner. And you definitely don't want to just get that money in and have it disappear, right? Because that can happen very, very quickly, right? So you want to have a plan. Once you know that amount, or that amount hits your account, okay, take a pause, take a breath, don't touch it for like a day or 2 or 3 or a week if you need to. And then think about what you actually want to do with it. Where does it need to go? Because you can immediately come in your account and then you start walking over to places, and in 5 minutes it's been spent, right? And then you're in the same boat trying to have the same plan for next month, but you don't have any that extra income coming in. So what are those goals for the next month, even if it's down to planning for the next week, but making sure that you're starting somewhere, making it a routine and a habit to sit down and create that budget, so that the goals that you want to meet within the next month, the next 2 months, are actually viable and they're successful. Like, they're those realistic goals, and they're not, those large goals that are going to make you feel stuck or feel like, oh my God, I didn't hit this large goal, so now I can't do any of the small ones. So really sit down, figuring out, maybe in the next 6 months, you want to leave your job, right? So how are you planning to do that, so that when you make that decision, you have set yourself up and put yourself in a position to do that and execute whatever that next thing is? Or if it's that, investment in a company, or it's an investment in rental property, what are those goals? How are you strategically getting there from your finances, so that you're not getting there and then, oh my God, how do I do this thing now, because the deadline to do it is here?
Yeah, definitely here. We have a bullet here speaking about seeking professional advice. I was looking in the chat, in the Urban League of Greater Cleveland, they actually have a financial opportunity center where they provide financial coaching. So great resource out there in Cleveland, offered by the Urban League affiliate. And I'm sure others have very similar programming. So please take advantage of that. That's all a part of seeking professional advice. I know, Dana, you were touching base on people using other means and having goals of, kind of being a business, being an entrepreneur. Let's go to the next slide. I think it's really important that we talk about the benefits of having a solid banking relationship when we're looking at our long-term goals. And oftentimes those goals involve solopreneurship, entrepreneurship, and things of that nature. So with that being said, let's kind of talk a little bit about that. Byron, I know this is your wheelhouse. Dana,
Yes.
I know you're a generalist, but let's kind of jump in. Next slide, please. All right. So Byron, listen, you're setting this up. You got some things going on, right? You've paid attention to your credit. You have a business plan that's solid, right? Talk to me
yeah.
about financial protection.
Certainly. So the financial projections, you
Oh,
know, if
projections. I'm sorry. I'm sorry.
if excellent credits the bike, the business plan is the handlebars, then the financial projection are the brakes. If I can make that comparison to that analogy. So the financial projection is very important because one, it's going to let you know how you're going to get paid, but two, it's going to let the bank know how it's going to get paid back or whomever you lend from. I mean, borrow from. And then most banks are cash flow lenders, meaning that we look at how much money do you have left over after your bills are paid. We're talking about salaries, we're talking about insurance, we're talking about keeping the lights on, rents, things of that nature. Because that amount that's left over, that's your threshold for a credit facility. So meaning that a bank won't lend you more than what you can afford. That's not right, and it's not legal. The second thing is you want to make sure, as the borrower, as the individual, maintaining your business, that you are able to maintain your business, that you haven't bit off more than what you can chew. So by having a conservative financial projection, will let the bank know that you're paying attention to your dollars and cents. But also too, it kind of gives them that reinforcement that this individual is not only set up to run a successful business based on projections, but they're focused on paying us back. And this is the type of person that we like to do business with and lend to.
Oh, Ken, I think you're muted.
Yeah, we're going to jump to the next slide real quick. There's a part of this conversation that I think is really important, and it's just access, right? Startup and working capital through your banking relationship. And I know that both of you probably have some, I guess, tips and points around this topic. Byron, I'm going to stay here with you because as a business banker, I think some of the important piece of this is just getting started. Am I correct?
Yes, just getting started. So again, whether you're an entrepreneur, whether you're, you have a business that's already up and running, maybe there's a pivot you want to do, maybe a new product or service you want to introduce. There's affordable working capital available to everyone. But again, depending upon who you dialing with in terms of your foundational bank. So that business bank relationship is key. I can tell you for a fact that M&T Bank is a top 10 lender for the SBA in the United States. We're number 2 in New York, we're number 1 in New Jersey, and across our footprint, which stretches from Maine down to Virginia. So with that being said, if you're strictly looking for startup money, meaning that you don't have any resources to put into a new business, you're looking for an SBA Express loan. And again, your business banker and your bank should be able to help you navigate that. For a more mature business, been in business more than 2 years, has revenues in the hundreds of thousands, maybe even millions, you're probably looking for a more mature business lending structure. So you're going to look at the SBA 7A and the 504 loans. And I'm talking about purchases of like large equipment. The 7A and 504, a lot of our construction company businesses prefer that because they have to buy large equipment, bulldozers and things of that nature. And then, of course, the SBA would actually help you buy commercial real estate, which to me also lends itself to that type of generational wealth that you want as you go about maintaining your properties.
Excellent. Excellent. We're going to jump to the next slide here because soon we're going to get to Q&A. Please drop your questions in the Q&A. Listen, Dana, so before we jump into Q&A, right, I want to speak a little bit about this. People always say maybe it's too late for me to start, right? I hear that a lot from individuals. I didn't have this information early. When I first got out of school or in the beginning of my career, and now they believe it's too late for them to start. Any advice for individuals that feel that way?
Yeah, I mean, it's never too late. It's never too late to do anything, as far as I'm concerned. I think the biggest thing to get out of it's not so much that it's too late. It's giving yourself grace and forgiving yourself for any kind of shame that you feel because you did not start. So you can always start whenever, but you want to start with the main thing, which is just forgiving yourself for feeling, putting that pressure on yourself to say, oh my God, I did this thing. It was bad. I could have been here. I could have done this. There's 50 million things that we could have done differently in life, but we never kind of stop to forgive ourselves in those moments so that we can start to move forward. And a lot of times until we do that, like that's the thing that keeps us from starting. So I think that's really the place to start. And then from there, you can tackle and really find success in any path that you choose, especially even when it comes to your finances, right? Just take ownership for whatever it is that happened or didn't happen or kind of made things the way that they are, or for whatever reason you just didn't start, right? There's a number of reasons. Some of it is really out of our control too. And then, start that process of the small steps that you can take to either start investing. And maybe it's for someone it's getting up and just start learning, right? It's attending a lot of these webinars in career services and getting access to these programs. So everyone's starting place is going to be different, and that's okay. Just, take ownership, give yourself grace, and know that, there's a lot of resources available for you to start at whatever place you're starting and just get started, right?
Getting started is key. Byron, I was reading information that stated that during the pandemic, you had the largest number of Black businesses created in the history of the United States. People were literally saying, I'm going to take my financial future into my own hands. And they often thought that starting a business was the best way for them to do that. As people tend to kind of navigate that space, people that are in or people that are looking to get into that, and we talk about small steps like Dana spoke of, kind of give me your blueprint on like the small steps that people need to cover before they walk into your office and say, hey, I'm ready.
Yeah, that's very important. First and foremost, do everything for your business before you walk into the bank that helps your business shine and that helps it gain that competitive edge. And the one program that I love, especially here in New York City, New Jersey, across the country, is the certified MWBE program. What that tells a bank and the benefit to the business, I'll start there, the benefit to the business owner. In New York City, in their certified MWBE program. And depending upon your niche, your business niche or specialty, that means that you're guaranteed to be included in 30% of all contracts that the city awards to businesses in your industry, which means that there's not much marketing and things like that you have to do in order to be awarded a very lucrative city, state, or federal government contract. And what's nice is you can be a small business and you can partner with a bigger business. We call them subs and primes. A prime is a larger business, a sub is a subcontractor. And you can work together, and you and that other business can work on very lucrative contracts for the city, state, and federal government. By walking into the bank with that designation, that lets us know that your business is contract worthy. You've been vetted by a city, state, or federal body. You have specific certifications. You're bondable. They did a background check on you. So that checks all the boxes for somebody like a business banker at a bank. The second thing is make initial contacts with CPAs, with bookkeepers. Get familiar with bookkeeping software so that way when you do come in, your paperwork is all in order. Because one thing we're going to ask you for is personal tax returns, business tax returns if you have them, and also your projection. Remember, CPAs can help you not only start your business, but they're going to help you stay in business. So you need to make sure that your financials are looked at by a CPA, your taxes are done by a CPA, all above board according to the books, because again, that just makes it easier for the bank to kind of push through the minutia and get to what you need, either startup capital or working capital.
Let's talk about it.
Yeah.
MWBE, Minority Woman Business Enterprise, right? Certified by the National NMSDC, National Minority Supplier Diversity Council. Am I correct, sir?
Yes, sir. Yes, wonderful program.
I'm sorry, Dana, you had something to add there?
Oh, no, I was going to say, I couldn't agree more. As a startup founder, I was like, the one thing that you need to understand your business through and through. You need to understand your go-to-market strategy, what you're trying to accomplish, the problem you're solving, how you're solving it. But most importantly, you need to know your numbers, right? There shouldn't be anything about your business that you don't know, especially when it comes to your numbers. You want to be prepared. Even if you don't have numbers coming in, right? You just need to be able to figure out how you're forecasting that, how you're looking at your business, where you feel like your business is going to scale to. And there's a lot of help and resources to help you do that. But knowing your numbers is definitely going to get you the capital. And if it's not bank capital, it's just any kind of capital in general, right? Whether it's from investors, angels, ventures, or venture, VCs or anything that's going to help your company be successful. But that is really the place to start, is to start, ensuring that you're talking to credible financial professionals, for your personal and for your business.
Hey, Byron, I'm getting the Shark Tank feel. Dana's talking about knowing your numbers. I feel Kevin O'Leary. I feel Mark Cuban, Damon John. I feel them in there like
This
drilling on the
is the
numbers.
new Shark Tank. It's the revamped Shark Tank. We're taking over.
Yes, yes.
All right, listen. Let's jump into the Q&A here. We have an early question in. Can you provide advice, resources on how to negotiate your salary, internal, external? And is this and this that are transitioning careers, right? So for individuals that are transitioning careers, they want some information on negotiating your salary. Interesting question for this conversation, but let's take it. Dana, you've worked, and I'm thinking this question might be aligned with how people come into their jobs and they're negotiating benefits as salary. Let's take it from that standpoint.
Yeah, and I'm by no means going to pretend to be the expert around this topic in negotiation salary, but I, have a bunch of friends who have transitioned in different corporate spaces. And I think the one thing that you have to go in with before you have that is kind of get with your team of people and talk to those who are in those similar positions, those that you trust, that will give you clear information about, hey, this is either what they've been paid in this role, or this is the average salary. And measure that up with your experience and either go in with that amount or a higher amount. You definitely want to put yourself in the best position to negotiate and advocate for yourself. Don't ever, take that first that first offer, because that tends to be, from what I know and speaking with a lot of individuals, just the lowest, sometimes bare offer that companies will give you. Sometimes it's fair, sometimes it's not. And if you feel like it's not fair, then you want to go into it saying, hey, this is my work experience, my credibility, this is all I'm bringing to the table. And also, in that moment, because it's also a scary place of vulnerability too, because where they can say, no, we're not doing this, and possibly move on. I doubt that will happen. There's always space for negotiation. But coming in with clarity, with facts, right? It's not just you saying, hey, I deserve to be paid X, right? You want to say, I deserve to be paid X because X, Y, Z, and have that plan behind that, and then have, again, like, be able to have those transparent conversations with those who have been in that role, what their salary was, what their experience is in relation to yours, so that you can make sure that you're going in there with all of the information to have that conversation, but always advocate for yourself.
Yeah, I definitely think that's an important part of the conversation. We did a digital career success series last year where we spoke about salary negotiation with the salary coach, Zana. I can't remember her last name, but Lulu Cycli was on that as well from payscale.com. It seems like research is key, right? There's a ton of information, a ton of portals, a lot of resources out there that will allow you to have a pretty clear idea of what the salary range is for not only your job title, but your level of experience and expertise as well. Now, ultimately, you have to be a strong negotiator for yourself. Many years ago, a few years back, the National Urban League had a program with Fannie Mae called the Future Housing Leaders. And we went out to colleges and universities and spoke to students about salary negotiation. And that was a big piece of it, right? Doing your research, making sure you have a range that you're comfortable with, and kind of knowing how to position yourself as someone deserving of that number. And that's really the important part. So I think,
and also understanding it too, because to your point that you mentioned earlier, it's not just the gross salary and your net, your net. It's also what in addition are you getting? It's vacation time. It's, when are you getting your bonuses? It's about, oh, hey, what is the path to the next role, right? And being transparent about all of those things at that time, understanding your, the stocks that you might be getting, and being able to talk to people and getting real clarity so that you understand when they offer you the salary and your stock bonuses, you understand what that means, right? And you're just not taking it, right? So, doing the research, talking to individuals who can help you.
Yes, yes. We have another question here. What are some ways to live below your means other than having the basics? That's a loaded question right there.
It is, but it's also not, right? It's being real about your money, right? I feel like sometimes we live in this fantasy world about how long our money can go and how long we can stretch a $20 bill. And I think as Black and brown people, we can make it stretch. We can stretch a dollar like no one else can stretch a dollar, but at some point that dollar turns into 15 and we have stretched it way too far. So you want to be realistic about how you're planning, right? We're always good at sometimes budgeting for the household things, the things that like maybe it's the rent or the mortgage or the light bill, or the things I have to do truly with the household. But then there's all these other things that we do on a monthly basis that we don't want to track because we just don't want to know. And that could be eating out, it could be travel, it could be, hair, it could be like all the other things that we do that we just don't want to know about. So it's also bringing that into the fold and saying, okay, well, these are the things that I'm doing, and maybe these are some things that I could cut out and maybe be a little bit more strategic with. So if you know that, hey, I want to go and meet with my friends, or hey, we're going to have this like meetup every month or so. Maybe you don't go every month, or maybe you just change the way you spend when you show up, or you eat before you go. So you're not ordering an entire meal, right? There's a lot of it's real. Like these are real conversations. There's a lot of things that you can do strategy wise to just say that, hey, this is where I am right now. And also being comfortable and transparent around these conversations with friends and with family. If you're in a season where, hey, I'm trying to financially work on myself, and feel free to use that language, like be around those who can support you in that journey and can be your accountability partners. So when you commit to being out again for that month, they can tell you, hey, no, you told us that you were trying to do X. So you need to stay home and we can FaceTime you or we'll text you, right? And I think sometimes we need that help for other people to tell us no, but just using those quick things to kind of live within where we are, cutting some stuff out, and only keeping in the things that are important. And it doesn't mean that you're doing that forever, right? People think sometimes when we hear budget, oh my God, I have to stay here forever. It's like, no, you can do this. It's only a period of time. This is temporary. And once you hit that goal, you can get back to, showing up more consistently.
Hey, Byron, I got a feeling you're saying, why don't you just work with your CPA and make that a business dinner?
Listen, that too. If you're a business,
Hey.
listen, you better start writing off all types of stuff. I'm not a
Yes,
CPA, so go talk to someone, but
yes,
that's why
that
Chip is
that's
here.
why the foundational conversations with the professionals are so key. If I can just go back to quickly, Ken,
So,
the negotiating salary and looking at benefits. I'll say this: I have two young daughters that are working age, college graduates, no experience. In order for them to get through undergraduate, I made them research companies that had tuition reimbursement as a benefit, because you really can't put a dollar amount on that until you actually get it. But once you get it, you do realize that it helps you pay for school, but it also helps you not take out student loan debt. The second thing is, anybody that's entertaining a career in nonprofits, look at the nonprofits tax return. It's called a 990, and it's a public document. At about midpoint, if it's 20-page document, page 10, they have to list out the highest paid employees of the nonprofit, including the CEO or the executive director. And that'll give you a baseline. If you're at that level, director, vice president, AVP, if you're at that level, you can see the salary either of your peers or even your predecessor.
man, that's a great tip right there. Thank you for the resource. Let's go to the next slide here. Listen, I would love the opportunity to give you both a chance to give some closing remarks. I know, Byron, you just spoke, so hold tight on those thoughts real quick. Dana, any closing remarks for our audience?
Yeah, I would just say, again, get started. Know your numbers from not just a business perspective, but also from a personal perspective. the more you're able to take ownership of either your debt amount, large or small, it doesn't matter. You want to know all of those numbers down to the penny. So again, you can take ownership so that you can start to move forward. Because a lot of times, we stay in debt, we stay in these places because we don't want to take ownership and we don't want to look at things, right? We get something and we're throwing it in the trash because we don't want to believe that it's real. So the sooner that you're able to do that, that is the place and the point of change and the ability to move forward in a lot of different ways, your finances and through your goals. So just get started, give yourself a lot of grace. It's a journey and one that will consistently change over time. So even when you get to that point of financial joy and happiness, there's always going to be something that you want to attain next. So plan for those next steps, or again, what I was calling those financial shifts of your life, and know that it's going to be a marathon.
Excellent. Mr. Logan.
Yes, I'll be quick. I'll be quick about it too. First and foremost, I think everybody viewing, listening, first and foremost, recommend this platform and the National Urban League and Kenneth and his team to friends and family. That's how you get dialed in, and that's how you stay dialed in and you educate yourself. Two, take advantage of anything free that's beneficial. For example, walking into your bank, asking for the business banker, sitting down and picking his or her brain, and then making an educated move with your money or with your business's money. Three, definitely take down Dana's information, her LinkedIn, emails, IG, because she has lived several lives in this professional landscape that we're in. I even was blown away by her background, so definitely tap in with her. If you need a business banker, contact, and I don't care if you don't bank with M&T Bank. I just want everybody who's viewing to be successful in what they do. So tap in. I'm going to help you. Bottom line.
And we're going to help them do that as well. If you want to tap in with our panelists today, we can go to the next slide. You can check. Go to the next slide. Yes, you can check in with Dana, CEO and founder of CHIP. I really appreciate you and all that you do. Changing how individuals prosper. You can catch her Twitter, LinkedIn, Instagram, website. And if you're me, you might be able to catch her at Grand Central, kind of rolling around, drinking coffee and having a conversation about money.
It's matcha latte with oat milk, because now you know it's older.
That's what I do. If you want to catch Mr. Logan, please tap in. Assistant VP, Business Banking Relationship Manager at M&T Bank. Man, you did a real power move right there. You said you don't care if they bank with M&T or not. You're a resource. So you can get with him on LinkedIn. He's a busy guy, though, I'll tell you that much. Company website, and he's been gracious enough to even drop his email in here. So with that being said, I'd like to thank both of you for opening up yourselves and your network to the Digital Career Success Series audience. I really, really appreciate it. Making money moves is such an important conversation, not just for our community, but for all communities at large. And we just commend you guys for just tapping in and helping us do what we do here at the National Urban League and Urban League Jobs Network Digital Career Success Series. All right, we are going to do this again, but you can tap in with me as well, Kenneth L. Johnson. Here's all my information, but if you just visit eastcoastexecutives.com, you'll be able to get everything. I live on LinkedIn. Love that place. I also want to suggest to our audience, listen, the Urban League is pushing out great information, and I think you should definitely tap in with UL Jobs Network on Instagram. You should tap in with the Urban League, the National Urban League, and UL Jobs Network on LinkedIn. And get that information, man. We're always talking about what we're doing, and what we're doing next is Total Rewards Talk. Join us Wednesday, April 17th, balancing professional commitments and personal well-being. That's a really important conversation, especially coming off of this Making Money Moves conversation. We just try to do it each and every other week for you. I want to thank all of you that have joined us today. For sticking around. Great questions. I want to thank our guests, of course, Byron, Logan, Dana Wilson. You guys were amazing today. Thank you so very much for joining us. In the team behind the scenes, Corey O'Donnell, Dave, everybody at the Urban League Jobs Network that kind of allow me to sit here and do this seamlessly and bring this stuff to you. Visit the UL Jobs Network YouTube channel for this and all episodes, Urban League Jobs Network Digital Career Success Series. I'm Kenneth L. Johnson. Thank you so very much for joining us. Thank you. Take care. We'll see you on the 17th.